Good morning, everyone, and welcome to the European crossover webinar. And bear with me. And we certainly saw the dollar take a hit for yesterday. And you can see here we came into some support. We'll kind of blow that up a little bit. Came into this 92.68, and we're still on the weak side of this, although we are into some support here. A little bit closer look there. And correspondingly, we'll take a look at the euro. As you know, we've been bearish the dollar for several weeks. It just couldn't rally, and I've been saying that for a while. I haven't even played it, you know what I mean, but I've been saying how it's just not, it just couldn't rally. But you can see here we saw three strong solid days here. We're kind of pausing a little bit here, but three solid days here. We'll take a look at the cable. And this was really a good day right here. We came right into this resistance level. You can see that here. This 31.51. And we're trading a little bit quiet right now. You can see here, very tight range. And we'll take a look at the Aussie dollar. And a nice rebound here in the Aussie. Now, as far as the economic calendar, uh, 6 a.m. Eastern, we will have a UK CBI trends, Mexican inflation at 7 a.m. Eastern, followed by the usual jobless claims here in the U.S., existing home sales at 10 a.m. Eastern. And we do get consumer confidence flash number out of the Eurozone at 10 a.m. Eastern, and they're looking for negative 15. Oh, we did get earlier French business climate. That came in just a tad weaker, 93. They're expecting 96. Irina says, good morning, to look at your dollar and S&P. Yeah, I mean, as I mentioned, I've been bearish dollar. I haven't played it. It's just I've been bearish. It's just like it couldn't rally when it was supposed to rally. That really, I just based it on that, just plain common sense. And remember when the euro did take a dip, and I noted that was when the news was coming out about how they were going to get that return to infections. And I said, hey, and I shared it on the chat, and I shared it in Twitter, the whole works, and nobody really paid attention to it. And we saw a pretty good fallback. I go, boy, the year is really suspect. We can see this infection rate is coming. And we took a pretty good slide in the euro at the time. That was, I guess, right in here. And nobody even paid attention. And then we just started sliding. Then all of a sudden, everybody gets worked up about it. But instead of taking a further hit, we just started moving higher. And then as equity sold off, the dollar, we didn't see the rally from the dollar. And that was my concern. But anyway, we're back up here. You can see here we're at this key level. I showed that in the chat yesterday, this 1870. And really all I do is I just go by the levels. I've said it before, sound like a broken record, like Mom used to say, but I just go by the levels and where's going to take it and where's the next challenge. Well, we've seen 3 good solid days. So not unusual that we're taking a pause. I talked about this yesterday, even in the chat, and put it on Twitter. I said, about, you know, once again, talked about how the dollar was so weak and you couldn't even rally if you shot out of a cannon. But I said, but for those that are, not sure what to do, this is a daily level, 1870, meaning, hey, we're kind of in an area where it's going to take a pause, i.e., don't go in and chase it at this level. I thought we might be able to push maybe a little bit higher, and really it's going into tomorrow potentially. But after three strong solid days, I think most people have already been knocked out of their positions at this point, unless you're trying to fade this level. But we shall see. We'll take a look at the indices. This has been something else to trade, the indices. We're on this a little bit lower end, but we're kind of holding here. They're still waiting for that stimulus deal, which really I don't even know what they're holding for, because they're not going to get it. Because even if Trump agrees, they just don't have the votes in the Senate to get the deal done. So they can all agree on a bigger bill, but unless you've got the votes and they just don't have the votes, it's moot and it's just pointless. I don't know. Honestly, I don't even see why it's even still kind of hanging around here, but they are reacting to headlines. Yesterday, I was able to go on and get out of position, but I myself even stepped in early, I thought, and then we finally broke lower. I was glad to get out, but then we broke even lower. Then we swung all the way back to VWAP, then fell all the way back, and we're just swinging back and forth like a monkey on a bar on a swing or something. It's just nutty. So with a little bit of headline here or there, you can just quickly jump right back up. I just think that it's very tough market to go and trade it. If you are going to go in and trade it, you really have to go in and trade just technically on the levels and adjust and trade those levels. If you get to a very good price that you think is a very good price, you can go in and step in. But once again, you almost have to use very wide stops. You can see that yesterday here, particularly the S&Ps. It's just that you're really taking a chance here with some of these swings. You can see how wild they've been. Easy to get run over. From here, 34.55 down to about 34.25, 30 handles, rally all the way back up to 55, only to fall all the way back down here to 30, only to fall, rally all the way back up to 50, only to fall all the way back. I mean, that's just, I think you have to be careful at this point. So I don't think there's a whole lot to view, to be quite honest with you, as far as technical levels. You can say we're at the key level here or there, but it's, the show's being run by algos. I don't mean that in a negative way. Some people will blame things on the algos. I'm just saying it's just reacting to these headlines, and anything that comes out about stimulus is going to drive the market one way or the other. So with that being said, we'll take a look at the news. Also, New Zealand dollars dodged a downside risk as the greenback dips. The Australian New Zealand dollars won a reprieve from recent selling on Thursday as the U.S. currency came in for fire of its own, helping both dodge and what would have been a damaging breaks of chart support. The Aussie had been hovering at 71.04, having bounced from support at 70.04 and 70.18 zone early in the week. A bulwark that has held firm in September. Resistance comes in at 71.36 and 71.70. The Kiwi followed much the same track to stand at 66.42. It was up from 65.51, having a low touched on Tuesday. It faces stiff resistance at the October top of 66.82. remains well short of the September high of 67.97. The rallies owe more to a pullback in the US dollar other than anything homemade, with the Aussie still vulnerable to further policy easing from the RBA. Markets are wagering heavily. The central bank will cut rates to 1/10 in early November from the current 25 basis points and expand its bond buying to the longer term debt. Yields on 10-year paper have dropped sharply to 7-month lows of 70.726. Treasuries have come under pressure from speculation of a lot more fiscal stimulus lies ahead should the Democrats win the presidency and control the Senate in coming elections. Yet, such an outcome could be positive for the outlook of global growth and the commodity-based linked currencies such as the Aussie. We expect the improvement in risk appetite post the election and more aggressive Fed easing, undermining the U.S. dollar multi-month. Analysts at Westpac wrote in a note. Moment. And let's go and move on to the dollar. The dollar drifts as markets look for certainty on the U.S. stimulus. The U.S. dollar treaded water against most major currencies on Thursday as U.S. stimulus talks remained the focus for markets, with trading buffeted over recent days by the extent of the progress made on the potential size of the aid package. On Wednesday, the dollar weakened to a 7-week low after Trump and House Speaker Pelosi boosted hopes of an agreement on stimulus was close, sparking demand for riskier assets. For a while, the pattern has been that while stimulus talks stalled, equities fell, and the dollar was being bought due to risk-averse sentiment. But with optimistic headlines like these, the market is inclined to shift to the risk-on mood and sell the dollars, said Daisuke Katakama with Mizuho. But prospects remain dim for the Republican-controlled Senate to approve any aid before November 3rd election, as Trump accused Democrats of being unwilling to craft an acceptable compromise on stimulus. Separately, the Federal Reserve, Lyle Brainerd, said the biggest risk to our outlook for the economic recovery was the fiscal support from the federal government would be withdrawn too soon. Alice said the dollar also was pressured by a surge in currencies such as the sterling, which jumped to a 6-week high overnight after Britain's chief Brexit negotiator said the talks with the European Union resume on Thursday afternoon. We continue to believe it's in both the EU and the UK's interest to strike a deal. Disruption to trade can affect Europe, and the resurgence of COVID in Europe, including within the UK, would increase the need for a deal to avert further economic impact on both sides. Analysts at Maybank in Singapore wrote in a note, the euro edged 16 tenths lower against the dollar at 1842. Traders are also awaiting the final debate between Trump and Democratic rival Biden later in the day, with the key feature this time around being a mute button to allow each candidate to speak uninterrupted. Yeah, but I think that's only on the initial, when they give their initial talk. So I don't think it goes through the whole thing. So it's not going to be that big of a deal, to be quite honest with you. I don't think it's going to be a wild one like it was the last time. It'd be pretty tough to do it. The last time was really crazy, as most people that watched it saw it. Um, but I just don't really see that there's any benefit of trading these markets right now. They've even raised the margins on them too. Well, obviously for good reason. Um, but let's go and move into the currencies. So starting off with the euro dollar. So the euro closed strong for a third day. Resistance on Thursday will be 18.97. So I was giving it the benefit of the doubt, even though we're at 70, to push a little bit higher. This would probably still roll into tomorrow if we just kind of sit here. It'd still be 18.97. We closed above that 18.29, which was enough for them to really get things going. So really, it's just taking a pause. The door's still open for us to move higher. So we'll be at 18.97 with support at 17.94. But we've already had a pretty good run, so I'm not so sure that we'll turn around and take off at this point or move that much higher. So it could be relatively quiet today. I mean, look at that. We stabilized here, nice solid day, another solid day, and then and yesterday. So it's not like, okay, now they got to take up some more. We can see a move a little bit higher into tomorrow. It's just that we already had a pretty good run, and most of those who were bearish have already been knocked out of the box, unless they're shorting against this area here. We'll go to the cable. This was really a good solid day. Well, look at that. It cleared out all these levels here. Think of it. Look, you see it and you go, oh, yeah, that's pretty good. No, look. It's the highest close since all the way here. Since essentially like September the 10th. That's pretty good. So anyway, cable posted a small close as the dollar faded. Okay. Oh, small. I said solid. No wonder I was wondering what was wrong. Cable posted a solid close as the dollar faded. The pair ran into resistance at the daily level of 31.51. You can see that. Resistance for Thursday will be 31.87. Support we supported 30.83. And that should roll into tomorrow if we see the pause. So 31.87, 30.83. And let's go and move into the Aussie. So the Aussie posted a solid reversal. Resistance for Thursday will be 71.48. We supported 70.86. And as I said before, is the analysis might seem rather simple, but look, I'm just giving you the levels. I'm not going to do. What's the point of doing all this fancy data analysis and all these crazy lines and stuff like? All it is the levels. You see what I'm saying? I mean, at least that's the when we do the bias chart, we're looking at the potential for resistance and support levels for the day. So basically, you want to use this as a tool into your own trading. So when you're saying, okay, I'm looking at harmonics, or I'm looking at this, or I'm looking at that, then you use this as a tool to say, okay, well, I've got some resistance coming in, like let's say yesterday, the euro. And I did share that we didn't have the webinar, but I did share. I go, hey, this is the daily level right here. And it was right there at 1870 at the time. We moved a little bit higher to 1875, then we backed a little bit lower, then we moved a little bit higher. But I think the day we closed right around, 1860 something, or we dipped a little bit lower. But I mean, you use it as a tool, but I don't, they don't denote what the actual high or the low will be. Although lots of times it comes in very close. Like yesterday was 1870. You saw that with the euro. You saw it also with the cable at 31.51. But what it means is, I've said that before, where's the next level where we will see volume come in, where you'll see On the upside, a bit of a fight trying to get beyond that level, meaning as far as volume, and the same thing on the downside. We saw it yesterday with the cable at 31.51. So anyway, that's the deal on that. Moving on now to go back on here. So we have 71.48 on the upside. Now, once again, where would it move to? And I'm looking at this low bar here. I don't think it'll necessarily get to that bar. Once again, we already had a nice run in the euro and the cable, but this is a good little reversal here. So if we can push a little bit higher, I think that we would see some selling before we can make it up to that area. We shall see. But it looks like things are a little bit calmer today. Let's go into the Kiwi. The with the way things are going with the stimulus, that may keep the dollar from completely falling all apart. You remember over the last couple of weeks, I was doing the submarine horn thing, and because I really did think the dollar was going to come apart. Looking at the Kiwi's held up better than the Aussie, because remember the RBA is looking to really do some more stimulus. So the Kiwi, like its cousin, the Aussie, saw a nice turnaround. Resistance on Thursday will be 66.83. You can see that level. With support at 66.26. And I really got this one pretty tight. Maybe even a little bit too tight. On to the dollar CAD. So the dollar CAD rebounded after triggering sell stops below 131. The pair closed at 31.40. Resistance on Thursday will be 31.88. You can see actually they've made it up to about 31.76. Will be 31.88 with the support at 30.97. We're kind of falling flat right now. So once again, we're looking at 30.97. 31.88. Not sure why that 32 was there on that other one. That might have been a mistake or something, because certainly didn't think it was going to come hard. But actually, that one from yesterday. Remember, because we didn't have the webinar, so I guess it's from here, and the door was open for us to go higher at that time. Although it didn't look like it. Let's go and move into the peso now. So the dollar peso saw a mild rebound after testing stops below 21 even. Resistance for Thursday will be 21.25. Looks like we made it up to about 21.22 or 23. 21.25. We supported 21.07. So. And I think we can change the Aussie back to bullish. And dollar yen really fell apart. So the dollar yen broke the support level of 518, falling to just below 440. Resistance on Thursday will be 47, with support at 427. So it looks like we've already been down here around 4. Oh no, that was yesterday. So we're trading pretty tight. So 427 on the downside. 487 on the upside. And then the dollar index. So the dollar index broke lower on Wednesday, closing below 92.68. Support on Thursday would be 92.41 with resistance at 93.04. And you can see this is just really a tight day. I think the only reason it hasn't fallen lower is because, like I said, the concern is if the indexes take a dip, that there will be some short covering. This 93.04 is probably a little bit too generous, but that's what we have. That would be the risk of the trade. Moving on to the Kiwi yen. Saw a little bit of a turnaround here, stretching it. Where are they going to go to? You can see this bar right here. That low is going to be the resistance, which will be 69.78. So we still have it right there. And support the open right here. Actually, the open from this bar, so just a little bit lower, so be, which is the close. 69.34. Euro pound. This really fell apart. Holy smokes, look at that. Man, they must have cleaned some people out. But I thought they were going to take off. Who knows? So support would be this bar here, this low. And we can see if there's anything else at confluence in here. Let's see here. Which confluence with here. Which confluence with this high. You see that? So that would be potentially down to 89. Let's call it 90 even. And resistance, we'll just go with the level, which it might be a little bit too close. Like this bar here, open, and that confluences with this low here. So it's just above. So let's go with 90.59. Take a look at the euro odd. Good run up here because you can look at this. I think some people got to the party late. I think some people got long, like right in here, which we did see a big move here. But I mean, you're late to the party. I mean, holy smokes. This thing, you can see right here, we got above 64.10, and now people getting long around 67. Like, that's really late to the party. Because you can see we're in the middle of this big old zone. You see that? Right there. So support would be, you see that low right there? And that confluence is right here with these. I don't think we fall all the way back, which would be, that would be right there, which would be 66.26. We might, if they want to test that lower end. So let's go with that. Let's give it 66.26 because we may have caught some people a little bit on the wrong side of the market. And resistance, we're going to go with the level. You see the level right there, 67.06. And they've actually just taken it out by just a little bit. I mean, they're low now, but it's not picking it after the fact. That is a level. You see that? So yeah, so that's where they ran out of gas, just a hair above it. So 67.06. And these levels, they're all drawn. And if you look on the charts or when I post these are already all drawn. I'm just picking them out. Sometimes I say, okay, well, let's go with this high bar there, which is just above the level, but that's right there. So you see this big old break, they're going to come back to this big level and want to fade against that. That's what they did. So let's go to the Euro Kiwi. Saw the same thing here. Look at that. So, man, what a reversal that is. Holy smokes. Complete engulfing bar. That's why I can't even make it to 78.80. That's how bad it is. It would be this high bar there, which is just above the highs. 78.65. And support right there. Right there. 77.31. Aussie yen. This is interesting here because you can see here we're just, I mean, you think we'd be looking at a 30-minute chart. Look how it's dead. It's interesting because look, it's been down, 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 and then we're just kind of stabilizing, but in a very tight range. We'll see if there's anything confluencing over here. So we pull this here, down, down, down. See the high right there? That confluences with this and this. That would be 74.13. And well, the yen's strong because everything's going on, so that's why I can't get any higher. We're going to give it the benefit of the doubt, but maybe not for today, but the next few days right there. You see this high? Confluences with that high, 74.62, and that's not saying much, which I think might have been the previous day's high. And onto the guppy. Resistance is going to be this close right there, which is 37.74. And support. See this low right there? You see how you're getting a lot of good touches coming across? So it's going to be there. That's going to be support, 36.79. Doesn't mean we're going to get to it, but that would be the risk level if you're kind of scalping around. And last one, sterling odd. Now this one's interesting. Look at that. And we'll see if there's any confluence. You see here, right there. Go with the body touches right there. And really you can go down to right there. Because that would be one to go. You'd go right there on the wicks. And that would be 84.83. You can use the body and say, oh, it would have been perfect right there, but that's not really, because the way this is set up, you'd want to go where the most touches are. Plus, this was, if this would have been like the market took off from there, then you would use that body, but it didn't. So this wick, This is where they're all confluencing at. And they're confluencing at 84.71. And support, and it is forming right now, Gravestone Doji. But the momentum's going its way. You see that? So it's pretty hard. It's a good area. Let's look at this real quick. See, it's a Thursday, and look how strong this thing's been. So to take profits, yeah, sure. To get short on a Thursday, pretty risky. But you can see it dip back to take some profits. But support, it's got to be this level here, 84.03. You see that? And there we go. And $30-minute chart on the euro. And I said that yesterday in the chat room. I said 1870. That was a daily level. Well, look how low they've gone. They've gone as low as 1838. I haven't done any work on these. I'll do them before they open. Usually I'll try and take a look at the dailies first. But really, this is just all being driven by these stupid stimulus headlines, which is just as equally aggravating as been the headlines for the cable traders with the Brexit headlines. Wow, look at Netflix. He got the hell beat up. And I warned this before in the chat room before the earnings release. I think it was Didier that said that he got out of his Netflix. But I said I remember I even saved that. I did a screenshot of it. I don't know where I put it, but that brokerage firm said about 45 days ago that they were looking for weaker earnings. I mean, weaker subscriber rates, and I saved it just in case. And but taking a look at Apple. Sort of looks in a weakened state because we've broken this trend line. We're just hanging here. So it's open. Here's the deal that what you want to look at. It's open to move lower. So if we were to get a break, let's say in Nasdaq or S&Ps, you'd want to go with that break because it has broken the trend line on the daily. And remember, we're past the Apple event and all that. So we're open where we could go lower. To be honest with you, I'm surprised to see we're doing this well because as many problems that we have here in the States, I don't see where people are going to be buying $1,000 iPhones. So really, I think that it could be faded and we could see this thing come down to easily down to this 109 area here. Looking at Microsoft, it's the same situation. You see that? And once again, just looking at the daily. So it's in the same situation, which I haven't even looked at these. So looking at Amazon, actually it's on a 2 hour, I don't know. I had it on the daily, but on a 2 hour chart. There we go. This is a long-term daily. You see, so they can still go back down here to this trend line down here. Same thing. Amazon looks weaker here. You see that on the daily? Looks like we can come down here to 30.95 without much trouble. That's $90. Looking at Google, which did kind of take off. NVIDIA. It's in a little bit weakened state. Same thing, it's open to move lower. Facebook. Same thing here. It's just basically rallying toward this trend line's at. Tesla. See how it's fallen back towards this trend line? And then Netflix. So these are open to potentially move lower down now here. So if we get I don't follow Bitcoin. Brock says, what do you think about Bitcoin? I don't follow Bitcoin. I have no idea. I'm just saying, it's not that I couldn't take a look. I just don't follow it all. I don't follow that. So I mean, I wouldn't be able to give anything measured other than say, let me look at it, do some analysis, and I just don't follow it at all. So honest, to be quite honest, you'd be asking the wrong person. The only thing, like I said, I think you can take away from what we just covered on the equities is that if we were to get a break, and let's now move into the 2-hour charts on the Nasdaq and the S&P. So this is the 2-day VWAP, 2-day. This is the VWAP, anchored VWAP from this is where Trump goes, I'm calling off the talks, okay? That's September 21st. That was the break there. So look, we're not that far away from the VWAP down here. So the market will easily come down here to this 11,500, okay? But we can still pull even lower. So that's what I'm saying. We're at a point now, and look where we are on the trend line. You see here? We've broken that. So if you look at it, many, not all, but most of those big 8 are in the same boat. You see what I'm saying? Where they've broken. So if they can easily rotate lower, and the real target, my target initially would have been this 11,500. I remember mentioning that from like last week. If they're to break lower, I said 605, but it'd be 11,500 would be going. But I think when you look at the big 8, they suggested a decent sized move, which would really realistically probably take us down to 11,355. So if we break lower, look for a move to 11,355 in that area, and then S&Ps. This is from way back. This one, but way back here. The September 21st one. We have to do it from here. Wow, we're not that far away from it. You see that? That's the VWAP from the September 21st lows when Trump said, forget it, I'm done with it. Actually, they even they went a little bit lower after that. So that would be like at 33.95. We're not even that far away from it. So we can easily get back. But the same thing, we're in a better position than the Nasdaq. Look at that. You see that? So they may end up faring a bit better than the Nasdaq. Where you can see the Nasdaq's in a more difficult situation. The Nasdaq is more open to breaking lower, and you can see that when we covered those equities. You can see how they're set up. They've broken below, and they're kind of sitting there in the middle after they've broken. They've dipped a little bit, and they're kind of broken. They've broken. It's the same thing, except in the big 8, I'd almost say they're like around here. So them rotating low, you'll see follow through, and that follow through should be us to 11,355. So that's all we have. Thanks for joining us here on the European crossover webinar. Oh, and from Amir says Tesla earnings after the close. Thanks. I don't think there'll be that big of a deal, especially the way the Tesla's been traded. But hey, you never know. But thanks, and thanks for joining us here in the European crossover webinar.